Welcome, welcome. We have a big group joining today. Before I get started, those of you who have attended past webinars know that I always do the always fun tech check to start, so I'll go ahead and share my screen. Should be good there. Let's hope. Sure. So, if possible, if you could raise your hand if you can hear me okay and see the screen. So, very, very good. Wow, super attentive today. Excellent, excellent. So, thank you. You're lowering your hands just as fast, so we're all Zoom experts. Good. We're going to give it another 2 or 3 minutes before we get started. Definitely bring your own snacks. So, Aaron, I won't call you a groupie, Aaron, but I know you've been on, I think, 3 or 4 of these at least, if not more. So, glad you keep coming back. Maybe next time you can bring the snacks. Do it that way, at least the virtual snacks. I think there is something in Zoom, whether it's popcorn or who knows what. So, and if not, you need to invent that, mint it as an NFT, and then donate the NFT to a charity. And then we're working on building out an appraisal process for that, by the way. So, future webinar there. Well, I'm going to go ahead and get started. We have a crazy number who attended, or actually registered to attend. We'll see how many actually attend, but it was actually over the Zoom limit, so I think we're in good shape, at least for this session. So, a couple quick housekeeping notes. I believe and hope my partner Ryan Raffin is on, so he will do his best, I hope, if he is on, to be able to answer some chat questions. If not, I'll be able to do that post-call. One thing, too, this will be recorded, so that question just came in. I do not send out the slides, so I've had some issues in the past, unfortunately, with that. It's always a couple bad apples ruin it for everybody else, unfortunately, but so it is. But yes, so this recording, and very importantly, we've done now, I think, 16 recordings from past webinars. All are free, and all are posted on the Charitable Solutions website, so under Resources and Webinars. So this will be posted likely in about a week and a half. So our normal cadence is at Tuesday and Thursday. This one, for all kind of reasons here at year end, pushing off the second presentation to next week. So that will be posted. In addition, we will then include any of the Q&A and chat, and then I'll be able to consolidate those, answer those all at once, so then you get the recording for the session plus the Q&A. So that's pretty much it for the housekeeping stuff. So we're going to talk about today cryptocurrency processing options from major gifts, hopefully any large gifts that are made outright during life, of course, and or to Charitable Remainder Trusts, CGAs, and I even included a couple of bullet points on estate gifts, and so that's coming up more and more as well. So jumping in, those of you who have attended the past ones, I think probably you could actually go through this, but I do take about 8 to 10 minutes sort of going through all the other crazy things that we do. And really I do that because A, I'm a horrible marketer, number one, and B, many people, quote unquote, know us for one particular thing, and they could go a decade and say, I had no idea you do this other stuff. So that's why I do this little 8 to 10 minute blurb very quickly. Main thing is our mission. So as a firm, we have a team of 20. There are 7 attorneys in addition to myself as part of the Charitable Solutions team. And our mission, since I founded the firm in 2003, is to help make gifts happen that otherwise wouldn't. And that is where I get very hot and bothered in being able to help gifts occur that because of either risk or complexity, something is going on that otherwise a good donor with a good asset trying to do good things is not able to do that. So that drives me nuts, and the whole team gets excited about helping lubricate that process, helping make these gifts happen. So super quickly, 10 years ago, I set up a charity, the Emergency Assistance Foundation, where we do emergency relief and disaster grants for hardship as well. So you can see there are $150 million in grants last year for COVID. That's a totally separate team. We have a team of about 140 staff on that side, but we also do some third-party administration, audits, risk management, and the emergency assistance fund space for whatever that's worth. Totally a different thing that we do. Professional advisor CE, kind of stuff that we're doing now, was doing pre-COVID about 70, 80 days out a year doing CE speeches, doing probably triple that now, but more virtual. So still do a lot of that. Obviously, board staff, nonprofit. We've got a menu of about 35 speeches or so that we do from 1 hour to 3 hours, which is painful for me and everybody else probably, but sometimes people want 3 hours of CE. So we have that sort of chunk. Then we focus on charitable gift annuity risk management. So when I founded the firm, it was all around helping make gifts happen, in particular in the two types of gifts that otherwise could actually have a negative balance. You could actually lose more money than the original gift if they go wrong. And so that's gift annuities and that's non-cash assets. So we have two actuaries on staff, that's more my academic background, and do charitable gift annuity risk management. So we do a number of these, probably done maybe 200, 250 risk audits on very large pools, typically 10 million plus, provide a risk management plan, you see there, modeling. Spend a lot of time with large concentrated risks. So we see things where the person might say, the charity might say, hey, we got one that was 50,000, one that was 25,000, one that was 2.8 million, one that was 60,000. Like, let's talk about the big one. So I've never had a call where these have gotten sideways on a $10,000 gift annuity. I get the call on the sort of that $500,000 plus that came in at the wrong time, frankly, and or the donor just continues, or more specifically the annuitant, lives forever, which they tend to do. So we spend a lot of time in that space. This year alone, we've helped a charity with over a $45 million gift annuity, one that was $15 million gift annuity, and a number in the $5 to $10 million range. So these things are coming in mega jumbo, and instead of doing CRTs, they're doing gift annuities. So another webinar we did a while back if you're interested in that. So help with both the reinsurance design where that's appropriate, brokerage, et cetera. Charitable appraisals. So we're doing a lot more of this. So we've got a team now of 4, basically helping to substantiate any kind of non-cash gift without going through all the different one. I do all the cryptocurrency appraisals, but all these different assets, the sort of the tagline for this sort of group is, if they can give it to charity, we can appraise it. So every different type of asset. We are one-trick ponies as it relates to charitable appraisals. We're only doing it for charitable purposes. So get the 8283, 8282 substantiation requirements, et cetera. And so that's really what our team is doing now too. So all those different areas. Then National Gift Annuity Foundation, probably should have done that one after National or the CGA risk side, but the National Gift Annuity Foundation set up a while back. We are now the largest by far independent CGA platform in the country. You can see there we are now in all 50 states as of about a week ago, can now do it in Hawaii, so in all 50 states. And then we grant 100% of the residuum back to the charity that the donors recommended in the first place. So it can be multiple charities and states that charities otherwise are not registered. Got Gary Sneerson on our team, worked on 2 gifts last week. One was a retained life estate for a gift annuity. One was a direct gift with life, real estate gift with life for a gift annuity that had a mortgage. So any kind of complex gifts. We've had a couple about crypto, which we're going to talk about here today too. So the bottom line is same thing. Donor wants to have a life income gift, otherwise not able to do that through their individual charity or multiple charities that they have an interest in. We then, in essence, function like a national gift annuity foundation, like a community foundation in that way to be able to receive that gift. We do all the sausage making, take up a liability, manage the asset, then 100% is granted out at the end. So that's it there. You see over $50 million in assets in that pool. And then non-cash management. So this is where we're spending a ton of our time, where most of our team spends its time. About 5% of our work is through direct consulting to charities on an hourly basis for specific assets that come in. And the other 95% is sort of the outsourced option through the Decamai Foundation, which I created in 2003 as well. And the unique thing about the Decami Foundation, like National Gift Annuity Foundation, is we never manage anything once it's liquid. So we're really an outsourced provider for any kind of non-cash gift that comes up, and I mean any kind. We still own property in Uganda, as an example. A lot of crypto, which we're going to talk about obviously today, but primarily, and a real theme for today is it's fun to talk about crypto. I like talking about it. You guys like hearing about it for now. But real estate, privately held business interests is everything. Like everything. So everybody's chasing the new shiny thing that is crypto. Real estate, privately held business interests. That's where all the action is. So you can see here, last year, and this is very important, last year we did 100 donations total, so it wasn't a ton, about 2 a week. 400 million donated last year. This is 400 million in only illiquid gifts that other charities had declined, otherwise we would not receive the referral. We then receive it. We do all of the risk management component, all the receipting, the substantiation. You can see their average fee is 1.6%, and then 30 days after the settlement of the proceeds come in from that asset, we then make a grant for all the rest, 98.5 cents, ish, to the charity or charities the donor was trying to give it to. So it's a giant pass-through for these kinds of gifts. Any kind of gift, super quick turn, long-term hold, whatever it happens to be. Very important point. So we did 400 million last year. We were at 475 million through the third quarter. We will easily go over 1 billion this year. We were doing 2 a week. We're now doing about 2 to 3 a day. So I have never seen anything like it. It's not crypto. All the discussions are crypto, but it's not crypto. It's privately held business interests, and it's real estate. That's where the money is. So massive amounts of activity in this space. We're sort of 7 days a week right now. So that's it. I hope that's helpful. Bottom line, we help make gifts happen that otherwise wouldn't, primarily through risk management and as a pass-through charitable entity for non-cash assets, primarily gift annuities as well. So with that, we will jump right in. Now, this is important too. So we did an entire webinar just on crypto on a lot of the other issues, not processing issues, the other issues. So this was last year's webinar, all of which is completely relevant, also free, also on the website. So if you said, hey, I thought we were going to be talking about this stuff, this was the actual title of it, what is virtual currency, what's the landscape, again, I've jammed in there for 2020 because it was exactly a year ago, what are the tax considerations, appraisal, legal, all those kinds of things, and the various charitable planning options. That's all covered on the last one, 45 minutes of webinar for last year. So I would encourage you to sort of seek that out. And then the processing options were the final piece, and that was maybe a 5-minute discussion last year. This became a sort of 40-minute discussion for this webinar. So that's where all the webinars are. Again, Charitable Solutions, LLC, go to resources, webinars, you can see all of those. So this agenda is pragmatic crypto grounding. So like what's really happening, at least from our perch, in this space. A lot of noise, a lot of activity. I'll call it flailing. I'll say it, flailing. And then I'm going to talk about the good, the bad, the ugly, the practical, and then sort of best practices and case studies. The most important thing you're going to read here today, this is all free, don't sue us. So anything that you hear, verify independently, check with your advisors. Probably a third of the attendees today are professional advisors. You can talk with attorneys, other professional advisors. So they're free, don't sue us. So I want to make sure that's clear. So crypto grounding, let's sort of jump right into what we see. Different perches, different people, our perspective. One, and I've got a little poll here. I've never launched a poll. I'm probably going to screw it up. But I've got 3 questions to start thinking about what you think the answers to these questions are. One, what percentage of total contributions this year to us, to the Decami Foundation, have been in crypto? So what's the percentage? 2, what percentage of board members, or we'll call them influentials, past board members, mega don't, whatever, who push the charity to have a crypto processing option because we've got to be out there doing this. Everybody's out there doing this. We need to be able to have a solution. How many of those people, we'll call them the champion agitators, with love, actually make their own donation? You could see how I ask that question. And then how many prospective donor charity calls and emails that I get every day produce one completed donation? So I've got a poll here, not done it. Let's see if I can launch it. I'm launching the poll. Here we go. So launching. So what is Decamai's crypto donation percentage? That's year to date. So hopefully you guys can put your stuff on there. Of course, I can't even see what the results are. Oh, there we go. Got it. So we've got 31% of our total contributions, 26%, 9%, and 2%. So, wow, you guys are very active. You can see there what ratio, number 2, what ratio of board members, influentials who push to do it, actually make their own crypto gift. Third one, just for fun, how many prospective charities calls and emails produce one donation? Okay, very responsive. Like almost 80%, 75% of people have participated. It's pretty fast. So I'm going to close it here in a minute or two. Last one's in. You got to jam it in there. Okay, ending poll. Ta-da. All right, sharing results. So I think you all can see that. I hope. So what is Decamai's crypto percentage for this year? So some people said 3% of people said about 31% of what we do, 26%, 12% of people said it's about roughly a quarter of what we do, 30% said 9%, and 56% said 2%. 2% is correct. Now, that's not 2% of the calls and emails I get. That is for sure. But it's 2% of our overall donations. So not that it's growing. I'm not saying it's not growing, but I'm saying there's a lot of noise around this. 2, what ratio of board members, and I did this is probably poor survey design in terms of how I asked the question, actually make a gift. So is it 9 out of 10 who push to do it, make the gift? 5 out of 10. So it is 1 out of a billion. That is exactly the right answer. So maybe 2 out of 10. I'm being a little bit jokey there, but you get it. You get it. So I have yet in the last 3 years yet to have any charity at least call me back and say the person that was pushing so hard, that asked so many questions, that if we had it available that they would do it, actually did it. So there's a lot of noise again around the space. And then how many prospective donor charity calls, emails produce one donation? The answer is a split, actually a triple split. Looks like a quarter of you, actually a quadruple split. Quarter of you think 75, basically prospective conversations for one. Quarter say 35, quarter say 8, quarter say 3. The answer is 35 for us. So I'm having 35 emails or phone calls for every donation that's actually made. I have never seen it in my life. It is a level of tire kicking that is impossible to imagine and difficult to control. I am not doing this webinar. I am doing this webinar to be nice, but I'm also doing it so that when the 6 to 8 emails come in every single day, I can say, watch the webinar. So because otherwise I'm on the phone half the day getting 2% of the gifts, when meanwhile our average donation on the real estate or private business side is 4 to 5 million, and we're doing 2 a day. That's where I need to be spending my time and the whole team. I say all that with love. So there's a lot. My only point here from our perch, is that I'll have so many charities that will call and say, oh my God, I've had 4 conversations in the last 6 months. This is unbelievable. Like, good. You need to have 30 for one of them to actually do something. So again, that gets back to the noise. So let me stop the sharing. I'll also say, if you guys want to make a ton of money, and this is 100% true, like a ton of money, watch whatever I'm going to do as an announced topic and then short that thing. So a month ago, I think on the day, I'm guessing, that I sort of put this together, at least the announcement, actually started and finished this presentation this morning, which I should not tell you since this is recorded. But I digress. So when I sent out the topic for last month, Bitcoin was at 68,000. Now it's at 57,000. It dropped by 20%. I did this talk about 3 years ago at the national conference of CGP, all about cryptocurrency, making virtual currency less virtual, all kinds of 50 titles. And I have to do that in March. Of course, that was in 2018. And so by March to actually October, it was tanking in October. So forget anything that you're doing now. You want to make a ton of money. Whatever I'm going to speak on will go down by 20 or 30% in the month after I announce speaking on it. I wish that were a joke. I need to have a hedge fund. I could make a ton of money. So the point in all of this is, again, pragmatic, maybe a little bit negative, maybe a little bit realistic, but what we are seeing from our perch in this space. Finally, very important, I see most all of the charities that are actually doing these gifts. So since 2015, I've held myself out as a qualified appraiser doing qualified appraisals for cryptocurrency, which means if it's $5,000 or more, you have to have a qualified appraiser. For at least the first 4 years, to my knowledge, I was the only person doing them. I've done over 500 of these, probably 600 now. I'm doing about 10 or 15 a week. Sounds like a lot until you realize there are 1.4 million charities. That means it's not very much. That's BBs off a battleship overall. And the point is, you can see there, since 2015, I have done a grand total of one less than two, one appraisal for any college or university. They may be doing them. Other people may be appraising them. But out of 500, I've done one. So there's this perception that everyone is doing this except for you. More and more are. A number of platforms are allowing this and making it much more easy to be able to plug into the process. We're going to talk about those too. But I also want to just sort of say this is sort of what we are seeing from a pragmatic perspective. Here's the biggie. 8 to 12 charities that I've done 500 appraisals for represent about 99% of the actual volume by dollar amount that I am seeing. I'm not seeing everything, but that's what I am seeing. And when I tell that to people, they are shocked. They're like, out of 500, I thought they'd be like 150, 200 charities. It's 8 to 12 is pushing it. It's 8. Very, very few doing a huge volume, at least in terms of the dollar size. So that's at least my grounding. So when we talk about Decami, so this was from the last month's webinar, which was life-altering, I am sure, for those who attended. We have the deconstructed gifts. This is through September. You can see they're just over 476 million only illiquid or complex gifts, all of which were initially declined, all of which are completed gifts, 121. So then you'd say, well, what's crypto? Let's wiggle on down. We sort of deconstructed everything for everybody. 14 crypto gifts. That's pretty good. That's, roughly, whatever that is, 12, 14% of the overall total. Okay. And that's about 9 million of the overall gifts. Now, a couple things you can glean here. One, real estate, privately held business interest is where everything is. I've mentioned that 4 times now. I may need to mention it a 5th time. But the other thing interesting, at least for us, is they tend to be pretty big. So I can't do the super quick math on that, but that's around $500,000 to $600,000 per donation. That tends to be where we live. Other ones live in very different lanes. But the point is that it's about 2% of everything that we've received so far this year. It will not be greater than that, I'll almost guarantee it, in the next 30 days. So just to make that quick point. So we're going to go through a couple things. I'm going to do this pretty quickly because I want to get more to the best practices and a couple case studies and more things that I hope and probably expect that you're actually here for. And that is, what can we do either as advisors or what can we do as charities to sort of better prepare a plan for these kinds of gifts. I will say too, and again I say this with love, but I get a lot of calls from charities to say, we're sort of getting ready to get ready. You'll see that on a couple more slides. And I'll say, well, do you have a specific donor? Well, no, but we might get one. Well, okay. And then they would say, well, what do you think we should do? Like, I have no idea. I said, it's almost like me saying to you, I know I want to travel, but I don't know when, I don't know how long, I don't know what my budget is, and I really don't know what I want to do. But because I don't know that, just tell me the options. I'm like, for the love of God, I'll be on the phone for 2 weeks. I don't know what those options are. So you've got to be able to sort of narrow down what it is that you are trying to accomplish. And hopefully this session will help at least a little bit sort of down that path. So when we talk about the donation process and conversion, I just want to be clear about what we mean. One, the charity can choose a third party, we're going to talk about that option, for the whole process. So if you choose a third party, everything else I'm going to talk about now, they are doing, generally speaking. Third party charity, not just third party vendor, third party charity. So then they do all this stuff. But if you said, no, we want to do all this because we think we'll have volume, then like, what is this? You open an exchange wallet or some kind of payment processor, so you can see that there. And here's where it starts to get all the constraints begin to be sort of folded into this. So when you talk about a processor, people will say, oh, we'll just use BitPay. Like, okay, that makes sense. They're a retail processor, a little clunky from a charitable side, but workable. But they only do Bitcoin. That's it. What if we want to hold Bitcoin for a day? As soon as it comes in, it's converted. That may be what you want, but it's only Bitcoin. So right out of the gate, you can see all of a sudden it starts to constrain what your various menu options are for various donors. Next, you can open the retail wallet in hours. That's retail. That's if you wanted to do one today, really minutes, you can go on your phone and open a retail wallet. Institutional wallet, totally different. Totally different. And many donors do not understand, or I would say appreciate, how different that is. Can take weeks, months, kind of a joke, years, decades. Have fun opening those. We'll talk about why a couple slides from now, too. Once the wallet is established in the weeks, months, years, or decades, then the donor would actually transfer the tokens or the cryptocurrency to the charity into its wallet. Think about a wallet like an account. That's a better way to sort of think about it. So the charity's opening an account, donor has an account, you'd say, hey, donor, send your stuff from your account to our account. Then we own it, then we can sell it or hold it or whatever your gift acceptance policy provides for. So then they can sell or convert to cash. Most all do that clearly as a best practice, very common practice, just like if this were Amazon stock or Coca-Cola stock or anything else. But there could be more constraints. Sometimes there are selling limits. You can only sell so much in a day, or there are withdrawal limits, or the particular token might be very thinly traded. If you get, let's say 100,000 tokens of whatever it is, and let's say that the daily volume is 1,000, well, that's going to be problematic. How are you going to move that 100,000 into a very thinly traded or low volume market? So that's another thing to sort of think about. And then the payment processors, like the Bitcoins of the world, will immediately convert to cash, also subject to other types of limits based on different types of account sizes. All that sort of changes and can change over time as well, for better or worse, by the way. So when we talk about processing, I haven't even mentioned in here then sort of the substantiation, the accounting, the insurance, the controls, all that other stuff sort of mushed into all this that we're going to talk a little bit more about too. And then we can talk about the fees side, exchange fees. So that's like a brokerage type exchange, if you will. When you're actually making the trades, those fees are usually very, very low, all things being equal. But the processors usually charge 1% to 2% is fairly common in the processing space. So it's kind of different, almost like a credit card processor, if you will, actually making the conversion of that crypto to cash. All right, so let's talk about the good. There is good. There's a lot of good in here. A lot of press around this, a lot of people showing interest in donating crypto. And so what the paths or the plumbing is to sort of make that happen is what we're going to talk about now. So first, this is actually very good and incredibly important. This is a gigantic nugget that is lost on many charities, sometimes advisors too, but many charities. First, you think about crypto, you think about Bitcoin. There are about 1,000 plus tokens that exist. Bitcoin is one, but it's the big one. So Bitcoin, BTC, is 42%. That moves every day, so it's going down. Ethereum's going up today. So 42% of the entire market is Bitcoin. Let's say it's 40%. You've got Ethereum, number 2, ETH, is 18%. Let's call it 20. 60% of the overall market cap, very big nugget here, are in Bitcoin and Ethereum. Why is that such a big deal? Because many charities call and say, what if we have a donor that's got XYZ Super Dogecoin Nugget Philippine version? They'll come up with all kinds of crazy stuff. And I would say it's probably not going to happen. Why? Because when I look at the appraisals that we do, actual donations to charities, 90%, and I should have put a plus there, 90% plus are Bitcoin or Ethereum. So if you said all we're trying to do through our gift acceptance is accept those two, you're getting 60% of the overall market cap, and at least heretofore, about 90% of those that are donated. Now, I'm a statistics guy. I get it. Maybe it's 90% are donated to charity because those are the only ones that charities will take in. So I get it, but most are focused on BTC and ETH, so Bitcoin and Ether. So that's just an important point when you're thinking about gift acceptance and sort of where your lane will be. The second piece of this, the press will not shut up about, this is Giving Tuesday. You've got Gemini, the giving block, which I'll talk about too in Gemini, have a pretty cool program that basically has crypto for charity. It's a whole little sort of widget and program, if you will, within Gemini. So more and more there's this sort of, never mind crypto press, charitable giving press, crypto charitable press. And so that is really picking up. Another article I saw today on CNBC popped out this morning just on crypto and crypto philanthropy, given the fact that it's Giving Tuesday. Now, I'll say this with love again. Those are the articles that everybody wants to read on CNBC. But I will guarantee you, I won't have the statistics, I'm making it up, but I'm going to say it confidently and you'll all believe me, that when you look at all Giving Tuesday gifts, all gifts, if crypto represents 1/3 of 1%, I'll be blown away. But that's where all the noise is because that's the fun thing to talk about. That's not the meat. The flip side is statistically you could say, well, yeah, it's 1/3 of 1%, and last year it was 1/10 of 1%. And the year before that, it was 0 or pretty close to it. So from a percentage, it's definitely gaining. More and more people want to have access to it. There's some very good tax benefits, which I'm not even going to cover here. Fair market value deduction for a very low-cost basis, long-term capital gain property. IRS deemed it property in October 2014, so it follows all the typical rules except for the substantiation side relative to the qualified appraisal requirement. But the point is that, again, a lot of press noise. And it's bad if you don't have a plan. So that's what we're going to talk about today, sort of what that plan might be. And again, we got about 30 minutes left, so how good can the plan be? Not great. But I'll give you sort of the structure for the plan, or at least considerations and different sort of advantages and disadvantages to different options. Another very timely, especially for my webinar today, research white paper came out, and the Fidelity Charitable just put it out last week. And it's a great paper. You can Google it. But I've included a couple things here that I think are particularly interesting. So you can see your cryptocurrency and philanthropy is the name of the paper. Fidelity Charitable, obviously the sponsor. And so here, this is one I just plucked out. It's not the first one or anything else, but it says cryptocurrencies investors are a disproportionately charitable group. It would ask the total dollar amount given by household to charitable organizations. Those without crypto, I guess sort of all investors, you can see they're 1,000 or more, about 33%, anything over $1,000 or more to charity. And then those who were cryptocurrency owners, specific owners, about roughly half of them gave 1,000 or more to charity. The other piece, interesting for many charities and many advisors for that matter, sort of understanding how to work better with millennials, that when you think about this, I find this very interesting from a trend standpoint. This statement, charitable giving is a significant or pretty important part of my life, for baby boomers, 69%, which is pretty good, certainly well over what the typical Depression era surveys were 15, 20 years ago. By the way, super depressing thought, we're only going to have our Depression era sort of greatest generation around another 3 to 5 years, and that's it. It's kind of weird. They've been with us our whole lives, and there will be none left in 3 to 5 years. So weird to think about. The point is that sort of as you get younger and younger, this becomes more and more important. And from 69% to my generation, Generation X, 71%, like, it's about the same, to 88% for millennials. And so very interesting when you think about this from a generational trend standpoint. More and more own crypto, and then those that have crypto tend to give, at least based on this survey, a bit more. There can be some other confounding issues there, but I won't sort of go into it now. But overall, very good. I think very informative information, starts to paint a picture a bit. This is interesting. So it talks about, do you know whether or not you can actually give crypto to charity? About half of people, interesting, about half of crypto owners say, yes, you can do that. 30% are like, you probably can, but not sure. And then I don't know or no, you can't. 2% is only no, you cannot. Down here, this is what we're talking about today. So have you had any kind of sort of advantages in terms of why you donated cryptocurrency to charity? You can see here, I'm not going to read through all these. I want to do something good, is the number one. And then have you had any challenges donating crypto to charity? The charity required a larger amount that I wanted to give. They probably called us, frankly. I'm like, I wouldn't do it for less than 25 or 50,000. For our model, a lot of other models, you could do it much more efficiently. Difficult to find nonprofits or charities that accept cryptocurrency. That's about half. That's what we're talking about today. Cumbersome process, also sort of within that same group. Why haven't you donated cryptocurrency to charity? You can see there, I'm using it for my investment. It's difficult to find nonprofits that accept it. I did not know I could donate it to charity, those kinds of things. But interestingly, for those who have not donated crypto, it said, how likely are you to donate any of your crypto to charity? And that could be sort of, I guess, whenever, not necessarily the next year. Extremely or very likely. So the people who have not done it, roughly a quarter of them said extremely or very likely that I will. Somewhat likely is 20%. That's roughly half are somewhat or more than somewhat likely to donate. So this is what we need to sort of prepare for as advisors on the phone, what your clients are looking to do, what kind of vehicles can be used to. So this is the good, okay? So what's the bad? This is what I sort of alluded to before. I didn't have much hair a year or 2 or 3 years ago. I didn't have any hair, but it would all have been gone based on all of these phone calls that just are incessant around what I would call the build it and they will come model. We're going to spend weeks and months and maybe years preparing and building and putting facades up and working with all the committees and working with, oh my God, I go crazy. I go absolutely crazy. I worked for charities for 10 years. I love working with charities for 10 years. I'm going crazy. So the point is also I've got here, we're getting ready to get ready. So we need to have every question answered. We need to talk about everything with crypto. It's like, good luck. That'll take years to do that. And the what ifs never end. What if I want to have a beach vacation? What if I want to have a vacation where I don't have to fly because I don't like flying? What if I have a vacation that I've got $18 and I want to have a great time for 2 weeks? Like, oh, I have no idea. So usually I ask them, which they never get back to me. Never is a strong word. Seldom get back to me is, do you have a donor who actually wants to do something tomorrow? If so, if yes, as if then, if yes, then what is the token exactly? Not, I'm not sure. They said something that started with an S. What is it exactly? And what is the value? If I know those three things, and many other great advisors on the call here too are experts in this area, this is not a joke. In 30 seconds, I can say, boom, do this. Or these two are your best options, explore those. If it's all these other hypotheticals, it's hours and hours and hours to me that are meaningless. So that's the what ifs. 2, I say this with love, you already see it. Donors are more odd than the normal odd donors. So all donors are odd. I'm a donor. I'm odd. I get it. I'll say guilty. You've got privacy issues. Probably 1 out of 20 appraisals that I have questions about that people will call me and say, hey, can you do an appraisal? Sure, I can do an appraisal. Here's where you go on the website. Here's the form, blah, blah, blah. They would say, I'm sorry, I'm not going to give you any of my personal information in terms of the address or my Social Security. And I'm like, I can't do the appraisal. That's required to, okay, never mind, I won't take the deduction. That's odd. I get why they want to be off the grid. Never had that happen with real estate. Never had that happen with artwork, privately held business interest, ever. So it's a different group. They want to be this was not where I accidentally hit caps lock and forgot to take it off. Very involved with the trading. So are you going to be available at 12:28 tomorrow afternoon? Because I think that's when it's going to spike, but I want to be able to, trade it at the moment that it's going to hit the absolute top, and based on the South Korean exchange. Like, oh my gosh. So super involved. Never had that happen, at least with me. Never is a strong word too. Very rare. Would I ever have somebody say, I'm going to give you Amazon stock, but I want to be on the phone with you right when I trade it in. And as soon as I send, I want you to sell it immediately because I want to hit this exact little penny price. Very different. So very much sort of in charge, want their hands all over the steering wheel, which can get to other material restrictions or other potential tax issues. All of this creates a lot of anxiety for the donor and for the charity, trying to get all these things lined up perfectly for whatever this donor wants to do, and the timing issue, and oh wait, Bitcoin's gone down, let me call you tomorrow at 2. I got other stuff I'm doing. So it can create also a lot, I should have underlined that, a lot of questions from donors. So what's your security key? What happens if you drop your phone? All these other kinds of things that pop up. And very difficult, and this is very much a true statement, very difficult to have a one solution fits all. What does that mean? What if they're different tokens? I talked a lot about Bitcoin and Ether being 90% of what we're seeing on the appraisal side. What happens if it's not Bitcoin or Ether? That could be a very different channel. What if it's on a different exchange? Well, we have an exchange, let's say it's Gemini. I can't remember exactly, but I think they trade 38 tokens or 40 tokens, something like that. I mentioned there are 1,000 tokens. Well, what do you do for the other ones that are not traded on Gemini? Oh, well, that was on Gemini, but this one's on Coinbase. Well, do you have 2 different wallets? So all that changes things. Different sizes, 500,000 plus, very different than $1,200. Totally different. So all might have different solutions. So there's not really a good, in my view, one solution fits all in every case. There's some good solutions, maybe B minus, but not like a Merrill Lynch brokerage account as an example, or Schwab, or Fidelity or Vanguard, whatever, where you could just say, hey, it's a brokerage account. If it's traded on the New York Stock Exchange, we'll just move it over there and sell it. It's pretty rare when you can't do that. Crypto is very different in terms of the different exchanges supporting different tokens or currencies. Next is the ugly. Not rocket science, but because it's so unfamiliar, it creates more anxiety. It creates more questions. Compliance issues, KYD, know your donor. So there are a number of charities, very much a best practice, we do this, where there's certain attestations that the donor is making prior to doing the gift, saying, hey, I didn't do, cyber ransom and shut down 7 orphanages in Asia to collect this Bitcoin through nefarious means. Now, I don't know how many criminals would say, well, actually, I did do that, so I'm going to check that, but, it gets a little bit silly. But the point is there really has to be some kind of compliance process for sort of sourcing of these. Now, I'm going to play devil's advocate. There's a good friend on the phone. He and I have sort of had some interesting little back and forth. But a number of charities require a very, 4 or 5 page intensive sourcing around attestations. And what I say, this is bad to say it, I know this is recorded, whatever, do you do the same thing when you get a check? What do you mean? Or maybe I could say, well, how'd you get that money to get the check? Did you sell, cocaine and get the cocaine money and go deposit it in small amounts back to your checking account, and then that was the source of those funds, and now I'm writing you a check? Nobody's sourcing a check. But you get the point. So it gets very interesting how this is being viewed very differently than other types of assets, perhaps rationally, perhaps not. And then have the valuation. I talked about the appraisal stuff, 8283, 8282. It's a non-cash asset. It's property, deemed property by the IRS. Do not assume this is like a security. It's getting a lot of charities in trouble doing that. And a lot of them are putting on well, here's the value that we got on this substantiation letter. No, do not do that. That is not the value. You're going to get sued. That comes under audit. So not good. Cyber insurance. What does that mean? Do you have coverage? What if you're hacked? What if you have a wallet and you lose the security key? What is theft issues, internal theft? What if you're phished? I mean, all these different things sort of pop up that are usually not the general realm of other types of assets. Talk about security key, staffing controls. What are your backup? Where is your redundancy? We're even dealing with that a lot internally, just trying to figure all that stuff out for us as well. And you can see, you probably already read it, opening a wallet is like setting your hand in a car door for months. Most all require PII, personally identifying information. What does that mean? That means that if you have a board, they are a governing body, and each one of those are authorized persons. And because they are, then you would otherwise have, and usually executive staff too, the Social Security numbers, dates of birth, addresses. I got a call from a university in Oregon. This was very late in the year, back in 2017, and they're going, "This is insane. We've been trying for months to open up a wallet. Now we get all the requirements." They said, "We have 62 board of governors." And I said, "Okay." I said, "I know where you're going, but go ahead." And she goes, "They want to have Social Security numbers and picture ID copies and all this other verifying information from all the board members. And then we're supposed to scan, basically email, all this stuff to them like this pneumatic tube because we can't get anybody on the phone ever." That's just so enjoyable. So you tell a CFO that, they're like, "We are not doing that on any level." So that's very much sort of the ugly, sort of the jamming part. Now, there's some potential solutions to that, but that hasn't gotten that much better. The practical. So this is in my head. I'm not saying this is right. Can't sue me for this anyway because it's my opinion. 99.9% of charities should never be doing all this internally. Just do not do this internally. 0.1% on 1.4 million charities is probably still too many. I should have made like 0.999 or something. You're just not doing the volume. Do what I would call the training wheels approach. You can use other ways of accepting these gifts, and which we're going to go through, to be able to satisfy the donor, get all the stuff in, do it timely, make it pretty easy. And if you start doing like 4, 5, 8, 10 of these a year, then you can start saying, well, wait a minute, we might want to open up our own thing. Good. You don't have to build this huge bike before you even put training wheels on. It takes forever, and 99.9% charities, in my view, at least for the next year, 2, 3, I don't know, will never have that volume anyway. But you want to be responsive to a good donor with a good asset, cryptocurrency, wanting to do good things. That's fine. So you can see here, this is just me, this is my opinion, at least 12 completed donations a year. That means like one a month. If you're not doing at least one a month, find some other way of doing it. At least in terms of what I would call the full Monty internal. You can use outsourced vendors to help, which I'll go through, or outsourced charities to help, which is fine. But I'm just saying doing everything yourself internally, I wouldn't do it. Most open up wallets with Coinbase, Gemini, Kraken, or other exchanges, or there are about 500 plus exchanges. So they would open up those. That's very typical for what charities are doing. Others, you can see here too, can choose to internally process with a vendor or a platform. I'm going to that next. But in my view, this is my view, you need to be pretty comfortably at about $25,000 to $50,000 at least of value every year, pretty consistently. If you got one gift at $100,000, you're good. If you get 15 gifts at $5,000 each, you're good. So the point is you need to have at least some level of volume to sort of get there. Or outsource entirely to a third-party charity. So that's sort of the options. I'm not going to talk about this one because this is like 15 charities in the whole country should be doing this anyway, maybe 30, I don't know. That if they're going to be that sophisticated, they need to sort of figure that out themselves. I've written a ton of Forbes articles, done other webinars. You can look at all that stuff. You can figure out how to do it. It takes a lot of time internally. You better have the volume, in my view. So I'm going to talk more about these next two because this is where most of the charities are asking questions. One, internal with help. Internal without help is doing everything yourself. Internal with help, that's using a third-party processor, platform, or consulting. The advantages, more turnkey. The vendor can come in and say, hey, here's our package. You plug into the package. We're going to charge you for it, as they should, and we have targeted tokens. What does that mean? We might have, I'm just jumping down here, like Giving Block is one of those vendors. They typically, and I don't want to speak on their behalf, you can do your own research there, but typically use Gemini as their exchange platform, so then you immediately get access to that 35 to 40 or so tokens. They're all the bigger ones. So Bitcoin's in there, Ethereum's in there, okay, all good. Well, what happens if some super weird one comes up? Maybe not going to work. What if it's super big? Maybe a little bit more difficult within that platform. Just depends, but more targeted tokens. The narrow target would be beyond that 35 or 40, as I mentioned, maybe not as much coverage. What about upfront onboarding process? And there's a process to sort of go through the whole, InfoSec stuff and potential linkages and working with them and sharing information and wonderful data feeds, wonderful platform. It's beautiful, but you got to plug all that stuff together, which is not a 5-minute process. Not horrible, but not a 5-minute process. And appropriately, I'm not just talking about Giving Block. All of these, of course, charge fees. So they charge fees for that service and for that value and for the processing and potentially for the platform. So it could be, roughly, real rough, $4,000 to $6,000 a year or so for the platform. Then they're typically going to be exchange fees and processing fees as well. So BitPay, as an example, typically charges 1%. They'll only do Bitcoin, as I mentioned before. And so if you get like a really big one, what about a $1 million gift? Well, that's $10,000 you're paying for that. Like, ooh, that's a little bit high. But on a whole bunch of small ones, well, then that can actually work pretty well from an efficiency standpoint. So you can start to see here some layering, or what I call triaging, between what the charity's trying to accomplish and what these different platforms will allow. Each one have different advantages and disadvantages. And you certainly could use multiple platforms, but you better have a lot of volume. So again, in my view, sort of less than 12 a month, you ought to be sort of picking one of these. For a number of very big charities, pick BitPay. I'm just throwing that out. It's only Bitcoin. So anything that comes in, automatic through BitPay, Bitcoin. That's it. Versus Giving Block, well, no, it's not that. Much more robust platform, generally higher fees, as again there should be, much more technology, interfaces, widgets, all kind of good stuff, 35 to 40 tokens, but that's different. You need to be doing some more volume there to sort of make that work overall. And then a Given is another one. Non-endorsements, don't sue me. Non-endorsements, these are just at least a path to run on. External outsourcing, what does that mean? To another charity. So typically these are all third-party donor-advised funds. Is this the solution? Yes, about a third of the time. It's not the best solution, but about a third of the time it can be. Why? Advantages, crazy fast. You could call any of these pretty much below: Fidelity, Schwab, other national DAFs, Ren is doing this, NPT is doing this, Community Foundation, Silicon Valley, and certainly others doing this, Decami, us, Endowments, another community foundation sort of online crypto model, all these different groups. But almost always in 24 hours, if you had a donor call today and say, hey, I've got Bitcoin, I need to do it tomorrow at 2, quite possible to do that. And now you're just outsourcing the whole thing to that other party. Targeted tokens. So now it gets back to most of these, Bitcoin, Ethereum, maybe a couple of the other ones have sort of larger groups. So NPT sort of takes in some more as an example, Ren. Silicon Valley Community Foundation, we take in sort of more as well, but we have to have multiple wallets to be able to do that as an example, as do they typically. And then sort of more one-offs. So it's like, look, I got one person that's popped up. I don't know if there's going to be another person in 4 or 5 months. We don't want to say no to this great donor. Can we just do it? Done. They would open up a donor advised fund with one of these groups, and then you basically say at the end, if you're the charity, I'd like all the net proceeds to come back to us. And they go, okay. So just a giant processing or a pass-through potential model. So, and no contracts. So there are no contracts between the charity and any of these. It's the donor creating a donor advised fund with these providers and then having the proceeds come back. There's got to be disadvantages. There are. It's a totally separate charity. It's not you, it's somebody else. Potential donor confusion. I'm trying to give to you, but you're pointing me over there, so now I'm setting up funds over there that I have to point it back to you. Not horrible, but not super clean either. Higher cost at low donations. Generally, very generally, you've got to be at a higher dollar amount for pass-through gift to make it worth it for them to do all that sausage making to push it out. Not always. Some of these actually don't charge any fee. Any fee. That's the low-cost stuff, even with larger donations, for quick turns. So Bitcoin, Ethereum typically can go through at no fee. We charge a fee, other ones don't. So that could be a different type model for those particular situations that come up. Super fast, no fee, sounds good to me. So again, non-endorsements, Fidelity, Schwab, all the other ones that I just mentioned too. So it's a third-party charity that's doing all that processing stuff from a couple slides ago that otherwise they would have to do. And then so what are some best practices? Having gift acceptance policies. I am a big, big fan of a triage plan. How many of these do we think we're actually going to get, let's say in the next year or maybe 2 years? Based on that, what kind of tokens are we likely going to get, at least so far? Bitcoin and Ethereum are the big two. Okay. And so if one comes in and looks like this, I'm just throwing this out. I'm not suggesting it. We're going to use, one of the national donor advised funds or a community foundation to process that particular gift. And we know where to go. We'll just sort of send them there. Maybe we'll give them an option or two. They can go there, do it, and then make the grant back. That's just an example. Determining the internal structure, whether you're going to do it all internal with help, or outsourcing structure, at least to start. This is my training wheels version. If you're a really big charity, you're getting 15 or 20 donors asking you about it every couple of weeks, I'd do it internal. Just set up the whole thing yourself. You might still look at some outsourcing vendors to help maybe make that process a little bit easier, better reporting, better customer or donor experience, but you've got the volume there to do it. The real key here is volume and how many of these transactions you're actually completing. So you're doing internal only. What are some of the best practices? The controls, the accounting processing, which extends to audit, onboarding the wallet itself, the weeks, months, years to sort of set that up potentially. But even groups, for example, like the Giving Block, again, not endorsing anybody, just throwing this out, they help with Gemini stuff. So they're able to sort of lubricate that process. They sort of have the plumbing there. So if you're just going sort of on your own or going through Coinbase or some other ones, it might be a much more turbulent process, in particular when you've got huge demand of surge of other people trying to open accounts at the same time, generally when you've got any kind of price, real big price increase there too. And then insurance, compliance, and so on. So a couple slides here left. I think I'm pretty good on time. I see tons of chats in there. I'm hopeful some of the people on my team are answering those. Otherwise, I'm going to have to spend this weekend answering 65 chats, which is not going to be fun. So crypto plan gifts. So this is a whole webinar for another day, but I just want to sort of tickle out some of the things that we are seeing. Gift annuities can be funded with crypto through the charity's internal wallet. Can't send that to a donor advised fund first. I get this question all the time. And then have the third party process it and then give the net back for a gift annuity. Cannot do that. So the charity has to have an internal wallet. So the National Gift Annuity Foundation, for example, can do that. I've heard of a couple of others at least thinking about doing it. We've done a grand total of 0. We've had 2 donors ask about it, but haven't done one yet. But that is possible, is the point. Charitable Remainder Trusts, seen a ton of these. About 3 to 5% of all my appraisals now are for CRTs. Generally, the trust itself will create its own wallet. Some will do what's called a cold wallet transfer, basically a deed of gift by assignment over. Or in some cases, the charity is serving as trustee using then its own EIN through its own internal wallet. So there's sort of multiple ways, again, not super easy, but to create a charitable remainder trust and actually fund that. So again, this is happening a fair amount. Be very careful working with an attorney who's done this. So in my view, there are probably 3 or 4 attorneys nationally that are doing a fair amount of these, and I haven't seen anybody else. So got to be pretty deliberate and intentional about what attorney or other type of professional counsel that you would get. CRTs, interesting to me too. CRTs are also used for sort of large volume donations or esoteric tokens. Let's say that I'm trying to make a gift to a charity that doesn't take all these kind of crazy tokens. Well, I can create my own charitable remainder trust, create a wallet with the same exchange that I have my personal esoteric tokens in, transfer in all those esoteric tokens, and then I can either continue to sort of hold or trade that crypto within the CRT, create some other potential fiduciary prudent investor standard issues. I'm sort of glossing through that. Or what we're actually seeing some then is once it's liquid and in cash, they're then terminating the CRT. So then the charity or charities they were trying to give to now just gets the termination cash proceeds. So it's a way to sort of backdoor in if they're working with charities that don't have wallets. Well, fine, I'll create my own in the CRT, move the assets there, have them all sold, terminate the CRT, cash goes out. So it's almost like a sort of de facto donor advised fund that they're creating themselves. Also, gifts through wills trust, very challenging. All kinds of estate planning noise and research sort of around this, commentary around this. So more and more gifts through will trust, cold stored in a vault, cold stored on typically a direct hard drive, and that estate planning requires expert counsel. If you don't have a security key, it's like you not having the combination to get all the cash that you own. It's gone. Some of the estimates are that about 20 to 25% of all Bitcoin that's ever been mined is gone. Lost by fire, lost because they forgot their security key or their password. It's gone. So it's a very tricky area. So it can be done. I'm hearing more and more about people doing it, but you got to be very careful on how it's done. So 2 crypto case studies. I think it's good on time. Got a couple minutes here. So first, let's say that a charity has their first eager donor. They're always eager, with $25,000 in Bitcoin. What can they do? Do something internally. They could set something up with a national donor advised fund, just run it through there as an example. What if it's $1 million? Same thing. So in many cases, they might, in that case, they could maybe use BitPay. We'll just say they use maybe BitPay as a processor for a smaller one. But now if it's $1 million, they're thinking that's 1%. That's pretty pricey. Why don't we run that instead through a national donor advised fund, perhaps one that does it for free? Again, we don't do it for free, but other ones may do it for free. Does that make sense? What happens if the donation needs to happen tomorrow afternoon? That's going to be a national DAF, unless or a community foundation, unless you already have all the plumbing and infrastructure set up, obviously. But this is the question I get all the time. Big donor, they want to do something tomorrow. We don't know where to start. That is an easy punt. If it's Bitcoin, that's got it right here, or Ethereum. Something else that creates more complexity. What if an advisor, professional advisor, has a client, charitable client, $100,000 in Solana, who wants a fixed income? So could do a gift annuity, as I mentioned there. What if it's $1 million? Probably better to do a charitable remainder trust, all things being equal based on the vehicles and everything else. But what if their favorite university doesn't accept Solana as a major gift? I just went through that. Maybe they could set up a CRT, move the Solana in, have it sold. He's setting up, the donor, trustee, setting up the wallet or the account, having it sold, and then just simply terminating the CRT back to the major university or to the university. So it's another way to sort of backdoor into it. You might say, oh my God, that sounds, kind of cumbersome. It is. It's cumbersome. But from a fee standpoint, I'm making this up. Maybe it's $3,000 to $5,000 to set up the CRT, sort of do all the maneuvers. If that same one went through BitPay, as an example, which it wouldn't because it's not Bitcoin, but at 1%, that's $10,000. You're still saving a ton of money setting up the CRT, throwing a whole bunch of stuff in there, getting it sold, and then granting it out. And then the final one was, what if a charity wants to launch some kind of crypto campaign, like for Giving Tuesday? Then more and more choosing groups like, again, no endorsements here, but like Giving Block or others are saying, look, we're really trying to institutionalize this, put this as part of our packaged marketing, put this, sort of in banner and under the lights under our donor communications, and therefore we need to have a little bit better of a sort of a platform sort of for a large number of gifts, maybe not as big. So you might say, oh my God, if we can get 15 gifts at $3,000 each, we'd do that all day long. Well, that's much more that sort of model, so more of a processing model, and big ones too. I'm not suggesting that, but the point is that it can be more of an institutionalized campaign. And that is it. So we've done a quick jaunt. I've done a quick jaunt, too quick, frankly, but I hope this at least gives you some perspective about sort of the pragmatic stuff that we sort of see from a level setting standpoint and the reality of these transactions, how few charities are actually doing them all internally. In my view, that shouldn't be much more than what are doing them internally now, all things being equal, unless they've got that volume, roughly at least one a month or so. Do not chase the super flashy crypto as a substitute for the not so flashy real estate and privately held business interest. It's 2% of what we're seeing, 98% of what we're seeing. Chase the 98%. But you need to also have different ways of triaging this through a good gift acceptance, whether or not you choose to use some kind of outsourced partner or vendor like Giving Block or Endowment or others, or Engiven, et cetera. Or for some, you might be able to say, hey, there are a couple relationships that we have with donor advised fund sponsors that we can then help our donor complete these gifts and to be able to get the money back on the back end too, without doing all this other stuff that I've jabbered about here for the last 45 minutes or so. So I hope this is helpful. Again, super big reminder, you can see down here too, November, December last year, a year ago, cryptocurrency donations explode. Are you missing out? It's a whole other webinar. It goes much deeper into sort of the appraisal, tax, legal considerations. But I do hope this is helpful. Anything else we can do, definitely let us know. And the bottom line is you'll be able to have this free link will be coming out in about a week and a half, so you can share it with anybody else internally or others. It will be on our website sort of hopefully indefinitely, and we'll include, although there are 99 questions now in chat, so we'll see. It might be 2 months. The Q&A and the chat, we'll do our best to sort of consolidate those for this session and next week's session to be able to provide that too. So with that, thank you so much. Have a wonderful year end, and anything we can do to help, let us know. Thanks. Bye-bye.